Hello guys, welcome to our YouTube channel Stocks for Everyone. Share price of Shilchar Technologies grew 100 times from 60 rupees in 2020 to 6000 rupees in 2025. So even after being 100x, this stock is still trading at a PE of 30 and actually it's less than 30 in screener.in. But now Shilchar Technologies has corrected over more than 25% from its all-time high, and I saw many people asking to make a video on this in the comment section of other videos. So I thought I'll make a video on Shilchar Technologies. So in today's video, let us look at how is it positioned in its business, its financial performance, that's Q2 results that's out now, and then its growth guidance or its management commentary on its future growth prospects, and then its capacity and scalability, its capacity expansion, and what are the few red flags or risks that you need to consider with this stock, and also its latest shareholding pattern. Also guys, disclaimer, this video is only for educational purpose. We are not SEBI registered. We don't intend to give you any buy or sell recommendations. So please consult with your financial advisor and then take your financial decisions, right? So with that, let's get started. So if you look at Shilchar Technologies, they're specialized in manufacturing of distribution power and instrument transformers, and they're also into this niche transformer business, and they're with very strong margins, and they're also expanding their footprint in both domestic and export markets. And why this stock might grow is because its growth is aligned with the rising power infra and renewable energy sectors. So it's into a very good growth business, that's transformers, right? And if you look at their recent quarterly results, that's Q2 FY26, then its sales stood at 171 crores in Q2 FY26, which was up 31.19% from 130.56 crores in Q2 FY25. So year on year, they're seeing 31% of growth. And then EBITDA stood at 53.6 crores, which is also approximately up around 31.7% over its Q2 FY25. And margin remained stable at 31.3%, and also its net profit stood at 45.94 crores in Q2 FY26, and it's up almost 40% from 32.73 crores in Q2 FY25. So if you look at the financial performance in its recent results, then all matrices are looking good. For FY25, they have given a revenue guidance of 550 crores, but then actual revenue exceeded their guidance, and it came out to be around 623 crores, and it saw around 57% year on year growth. This was for fiscal year FY25, and that was really good for them to give a conservative approach and then beat their estimate, right? And then if you look at why they saw this much of huge growth, then it was mainly because of its robust execution and strong demand both from domestic and export. And exports formed almost around 43% of FY25 revenue, and this is because of India's very good infra cycle, right, that happened. And then if you look at their FY26 growth outlook, now they're saying that they want to give a conservative approach of 750 to 800 crores, which is almost 20 to 28% over FY25 revenue. So even this time, if they can exceed their growth outlook, then it would be really good. And then there are few constraints for its growth for this year or for next year or in short term, that we'll discuss in our red flags section, right? So please be patient till then, right? Now if you look at their capacity and scalability, in August 2024 they increased their installed capacity from 4000 megawatt ampere to 7500 megawatt ampere, that is a massive 88% jump. And now this facility operates on a 17-acre land, and 8 acres is still unused. So if you look at long term scope, then they have the capacity to scale it up to 25,000 to 30,000 megawatt ampere depending on the demand that they see, right? And if you look at their capacity expansion that they are planning, then they are planning to add 6500 megawatt ampere to transformer capacity at Gavasat plant, and with that their capacity from existing 7500 megawatt ampere would be going to 14,000 megawatt ampere, right? And then if you look at their expansion or the capex that they are doing, this is mainly because their utilization is currently at 100% with the existing setup. And if you look at the investment that's needed for this capacity expansion, then it needs approximately around 90 crores, and they are funding it through internal sources itself. And then if you look at the expected date of completion of this capex or capacity expansion, then it's April 2027. So they're saying that they're gonna increase their capacity from 7,500 to 14,000, which is almost around another 88% increase in the current capacity, but it would be happening only after April 2027. So their existing setup would still be the same with respect to their what is a capacities for until FY27. So then there is some particular threshold cap that they can reach until their FY27, and beyond that they need to have their capex up and running so that they can have the growth beyond the threshold, right? What's that threshold, and is it a very big red flag? Let's look at the red flag section. And if you want to look at the goal of this capex, then it's mainly because they want to meet the rising demand that they are seeing and also reinforce themselves in the power and distribution transformer market. And now let us look at a few important pointers or risks, or you can call it as red flags that you need to consider about this stock. If you look at their working capital cycle, then their working capital cycle increased from 77 days in FY24 to 112 days in FY25. So what does this mean? This indicates higher receivables or inventory buildup, right? And this may constrain their cash flows if not effectively controlled. So increasing working capital cycle for any company is not that good sign, right? And if you look at the institutional investor activity, then K India Opportunities Fund, which is managed by Kotak Mahindra, has trimmed its stake in FY25 in the stock. So this suggests some sort of caution from institutional side, despite companies' very good operational strength, right? And there's also this capacity utilization constraint that might come up when we look at the short term growth for this stock, as we discussed, right? So now if you look at their Q4 FY25 revenue, it stood at 232 crores with 100% utilization with 7500 megawatt ampere capacity. That's their highest capacity, right? Now their capex will happen only around April 2027. So until FY27 completion, there's no increase in their capacity, right? So with 100% capacity utilization at 232 crores, even if they grow with the same rate of 232 crores in FY27, their maximum revenue potential is around 930 crores. So which will again come down to 20 to like 25% of their growth, considering this stock will also hit 20 or 25 or 28% of growth in this fiscal year. So their max growth that they can reach in FY27, that's not this fiscal year completion, but next fiscal year completion is 930 crores. So this stock can grow, or their business can grow at a maximum revenue of 930 crores, which is 25% growth in this year and 25% growth in the next fiscal year, right? That's what their capacity utilization is speaking about, right? But in case if the stock can acquire some other stock, then inorganic growth can come in, right? That we'll never know. So this is just what the business understanding that I can see here looking at their capacity utilization. And obviously since their capex would increase their capacity from 7500 megawatt ampere to 14,000 megawatt ampere, with their new capacity their revenue can grow beyond 930 crores starting from FY28, right? And also with 930 crores of estimation that I'm doing now, that would also be in line with their FY27 estimate that they have given, right? So this short term ceiling is something that you need to consider. So you just can't believe that okay, this stock can clock a revenue of 40% or 50% in next year, like that, then probably it's not uh, a achievable dream for you, right? That's what I can see here. Again guys, this is not a buy or sell recommendation for you, so I am not intending you to sell this stock now. I'm just giving you the analysis that I see with their capacity utilization, right? And if you look at the industry specific risks, then transformer sector depends on the project execution, and this also includes risks from infra slowdown, regulatory delays in payments, or slower renewable rollout, right? And there could be temporarily impact on its order inflows also. The last pointer is about US tariffs impact. Then North America accounts for around 20% of the total export, and the rest is around 80% that's coming from Middle East and North Africa, right? So we saw that 43% of the revenue is coming from export, and out of 43%, then 20% is coming from North America. So this is one thing that we need to consider, because there are tariff things that are going on from US side, right? And if you look at their shareholding pattern, then FIH stand at 2.12% and DIS stand at 0.13%. Promoters is stable at 64.01% and public at 33.73%, which is bit high. And if you look at the recent activity, then this is from June quarter. That's the latest shareholding pattern that I can see on screener.in. Shareholding of FIIs have increased from 2.05% in previous quarter to 2.12% in June quarter, which is a slight increase in FII share, right? And now let us also look at Shilchar Technologies fundamental ratios on screener.in. If you look at their market cap stands at 5030 crores, current price of 4397, and then stock PE is 28.3, ROCE excellent at 71.3, and ROE at 52.9, and PEG ratio 0.24. People usually consider PEG ratio to be less than 1 as undervalued. And also, if you look at their industry PE, it's 38.1. So it's 28.3 PE is considered undervalued compared to its industry PE. And if you look at current ratio is excellent at 5.14. So if you look at its last 5 years chart, then you can see that stock grew from 60 rupees to 6000 rupees, which is 100x, but still the stock is trading at a P of below 30, right? And if we look at the profit and loss, then you can see that stock has consistently grew from 71 crores in March 2020 to now almost around 620 crores, which is close to growth of around 9x in last 5 years. That's why the share price has increased over 100 times, right? From 3 crores of operating profit, now they're standing at operating profit of 185 crores. And even when you look at net profit or EPS, that's the same story that you see, right? And if you look at their reserves stand strong at 408 crores, and borrowings is zero, so it's a zero debt company. For a small cap company with such big growth aspirations or growth that it's showing, to be a zero debt companies gives very good amount of confidence, right? And if you look at the cash from operating activity, it's around 40 crores, which is good, but the net cash flow is negative. And if you look at their debtor days have increased recently from 86 days to 134 days, and even their working capital days has increased from 77 days to 112 days. So this was for today's videos, right? And if you find this video useful, then please hit that like button, share it with your friends, and subscribe to our YouTube channel. That would give some sort of motivation to come up with these kind of videos. And this will take a lot of time to research and go through their con calls or investor presentations, and then come up with the presentation that you see on the screen. I hope my efforts will not go in vain. So we'll see you guys in the next one. Till then, take care.